Nobody's sure if we're heading for another global recession, but there are some ominous signs. Tonight, we're looking at how the world got into this fix, where it might go and what it means for Australia. Let's start with some of the global pressure points. Philip Williams is in London, where the markets have just opened. Lisa Miller is in Washington, waiting for Wall Street to come online. And Mark Willesee is in Tokyo, the heart of the Asian financial hub. Philip Williams, everyone's anxiously waiting to see how the European markets react to the US credit downgrade. What's happening so far?
Well, I guess the word really is volatile. As soon as the markets opened, they plunged about 1 to 2%. Then they rose 1 to 2%. Now they're back down around 1%. So there's been a lot of nervousness and a lot of waiting and seeing which way this goes. The European Central Bank put some sort of floor under the market by saying they would buy Italian and Spanish bonds. That's worked in the bond market. The bond yields have come down significantly. But still, this is a long, long way from a cure, and people are talking nervously about what happens next. So in Europe at the moment, it's a minute-by-minute proposition. The market is just hovering now at about 1% down, but it's going to be a long day ahead, and no one really knows where we're heading.
Lisa Miller in Washington, what sort of jolt has this downgrade delivered to politicians in the US, especially the White House, and what are people bracing for on Wall Street today?
Well, Lee, as far as Wall Street goes, the big traders spent Sunday holding conference calls with nervous investors. In fact, one of those companies said they had 4,000 investors calling in, which might give you a sense of the anxiety. It's been in Wall Street's interest to suggest that the downgrade has already been factored into the pricing that they saw on Friday, because there were rumours ahead of Standard & Poor's decision that it was coming. But certainly we've seen roller coasters over the end of last week. That's expected today on Wall Street, that volatility to remain, but a suggestion that it should not be as bad as what people first thought. On the political side of things, well, a lot of the Americans I've spoken to don't quite understand what it might mean for them and their wallets, but are just totally disturbed about what they're seeing in Washington. Of course, Standard & Poor's said it was about the political bun fighting that was going on and the inability to get away through the debt that caused this downgrade. And the evidence on the weekend was that that had not changed at all from any of the political parties. Barack Obama is lying low at the White House today. He's only got 2 events on, both fundraisers. And of course, that's what it's all about. 15 months until the election. And at this stage, he has a lot of trouble at hand.
Well, let's bring in Mark Willesee. Mark, give us a sense of what's happening there in Asia where you are. Is it as jittery and as volatile as how Phil and Lisa have described in London and Washington?
It's been just that. Markets are basically closed here now. We've seen the Shanghai Index and Hong Kong's Hang Seng basically head south first up, and then there was a slight recovery, the Hang Seng finishing about 2% down. South Korea, that was a lot more volatile. In fact, it tumbled 7% at their share market. It did finish a bit better than that at 3.8% down at the close. Here in Tokyo, the Nikkei, it did finish down as well, 2.2%. The big names, Honda, Canon, all took a bit of a punch in the face, really. They finished well down. But here, the main problem is the strong yen. That's an issue for the Japanese government and has been for a while. The yen is seen as a safe haven currency in times of turmoil, times like these. So last week we saw record surges against the US dollar. That has meant that the Bank of Japan intervened last week to try and weaken the yen to make Japanese exports a little bit more affordable. This is an export-driven economy after all, but the yen is again surging. So there could be another intervention by the Bank of Japan, and that's what the government here in Japan is warning now.
OK, Mark Willesee, Lisa Miller, Phil Williams, thank you very much for bringing us up to date.